All right. Gary and Willis here with Pure Funding Mortgage. We are going to talk about one of the things that we started the business on. There's three things: process, product, and passion. And one of the things that I want to kind of dig into a little bit today is, a lot of people, we're still getting, first time home buyers and even folks that have bought houses in the past. Um, our process is a little bit different how we do things.
Yep.
So I think it's important for us to kind of, let's walk through what it's going to look like when you start the process with us. When a client comes to you, Willis, and they say, "Hey, look, I'm ready to start shopping. What can I expect?" And what are some of the kind of little kind of tricks that we do early on to kind of help make the process smoother in the long run? So we're going to talk about that a little bit today,
Yeah.
a little bit of process.
So fun. So
Yeah,
fun.
yeah.
The exciting stuff. So you're excited when you're coming in and you finally made that decision to buy a home. The one thing that you want to know more than anything is how much home can you qualify for and what does your payment look like? And sometimes those things match up and sometimes they don't. And so what we want to do is the first thing we want to do with our process after we've talked and we've kind of got an idea of where you're going, what you're wanting. Um, we want to get an application filled out, and we do, have to do a credit pull, and it's not just because we need your credit score. A lot of people will be like, here's my credit score, and that's a huge part of it because a credit score
Yeah.
can determine what kind of loan product we're going with, and different things like that, and how much your rate's going to be. But the bigger thing that we get off that credit report is, have you ever had a bankruptcy? It does tell us on there. Have you ever had a short sale? Those are two big ones that can sometimes, depending on how long ago that's been, be a stopper
Yeah.
for a year to at most 4 years. But with FHA too, um, the other thing that we look at that probably happened, I mean, that is definitely more so than those two stoppers,
Yeah.
is we need to see your debt structure. And the biggest responsibility of a loan officer is to make sure that you have the ability to repay your loan.
Right.
And how we determine that is based on your debt to income ratio, which means we take all your debts plus your new home, plus the taxes, plus the homeowner's insurance and HOA if it has HOA fees, and we see how that compares to your monthly gross income. Not the amount that you take home, but your gross income, the amount that you get before Uncle Sam takes out his share.
Yeah. So the money that gets deposited into your checking account is not the number we're looking at. We're looking at the bigger number. So
Yeah.
that's a huge.
That's
A
it.
lot of folks get a little confused on that one, but it's the gross number that we're looking for.
Yeah, exactly. And so then we come in, and depending on what product we have certain ratios that we have to stay below. And as long as you're staying below those ratios, they believe that you will be able
Right.
to decently repay that
Right.
that loan. Now, sometimes, like I said, you might say, I want to have a $400,000 home and I
Right.
want a $1,500 a month payment. I mean, there was a time that might have happened. Unfortunately, that boat has sailed. And so we have to look at what's possible now. And so if you want a $1,500 payment a month, you're probably looking at a $175,000 home to a $200,000 home here
Or
in the
just
state
more
of
down
Texas.
payment.
Or more down payment.
Yep.
If you're looking at $350,000 home, you're probably looking at $2,000 to $2,500 payment somewhere in there. I feel like that's
Yeah.
about right. And so we can look at those options. And sometimes what it is and what we try to do is we try to talk to counsel you in the best way to help you reach your goals.
Right.
It might be that $350,000 home has a payment that's a little too high right now, but when rates come down, there's always the ability to refi, and that can save you a few $100s a month on your payment. And depending on where rates come down to, how they come down, when they come down, you might have that high payment for a few months or a few years, but it's not your forever payment. Now, it might be your forever house, but it's not your forever payment.
So when the consumer comes to you and they fill out the application. They give you the documents that you need. So your bank statement,
You
your
go
pay
over that.
stubs.
Yeah.
Are you issuing a pre-qual, a pre-approval? I know in the industry, there's, terms can be kind of,
Wishy-washy.
yeah. So walk me through that real quick.
Yeah. So what we do is we issue a pre-approval. Now, a pre-approval is based on a credit pull to where we see your debt. It's based on you giving me your pay stubs, your W-2s, your bank statements, or your tax returns if you're self-employed.
Right.
And us pounding out what your income is. And then we can come in and we can issue a pre-approval if you
Right.
get an approved eligible findings on an automated underwriting system that we
Right.
put your loan through. So that's called AUS for those that know the term. We run that on every one of our loans that we issue a pre-approval
Right.
after we've verified income through tax returns or pay stubs.
Right.
And if you have any kind of variable pay, meaning you get overtime, you get bonuses, you get commission, or you don't work 40 hours a week guaranteed. Some weeks you work 20, some weeks you work 35, some weeks you work 45. Then what we have to do is we have to get your year-end pay stub from the previous 2 years. And the reason is that we have to use an average on those variable parts of your pay.
Right.
And so there is some documentation that you need up front.
Right.
On some of the more complicated ones, basically anyone with variable pay that isn't a salaried employee or they're self-employed, what we like to do is get a verified approval letter. And what
Yes.
that is that means that we have technically taken your documents, given them to an underwriter, and an underwriter has underwritten the income and asset portion of your loan. And the cool thing is that when you get your home under contract, you can close in as little as 14 days
Right.
or even potentially sooner, depending on when the appraisal comes in and you pick your homeowner's insurance.
Yeah.
Because everything's out of the way on those loans, which is really cool.
Yeah, we had one come in yesterday, and the conditions, we submitted the contract once they got the house. They moved the loan into conditionally approved, and the only thing that we need to get now is the appraisal, the title, and the homeowner's insurance, and that was it.
Yeah.
And so you pretty much get all the heavy lifting done in the process. So it takes the anxiety out of from the point of contract, because that's obviously everybody, there's the fear of entering the contract and then losing out in the contract during the process, which is what we never want to happen. And that's why we do all this work on the front end. So it's super important for you as a buyer to reach out to your lender up front and to make sure that they're going through this process. It's you have to have your credit pulled. You have to submit your documentation. In our case, we're going to do a verified approval letter. And that's just going to ensure you and give you a letter to put into your offer package that's just going to solidify your offer even more than that next person that may or may not be already qualified to that level. So it's super important.
Yeah.
So I guess, once they've, once the client, they get the piece of paper, the verified approval letter or the pre-approval letter, they shop, they're out shopping, they get a contract.
Right.
Now what happens next?
So the kind of the trigger that pulls us back into the process. So you get your pre-approval, you're out shopping. That might be a weekend. It might be a month or two. The next step that really, and we're going to call you, we're going to keep up with you, but the next step that really triggers us into proceeding is when you get your contract. So
Right.
you email that to us.
Yep.
And we put everything into the system. It generates all your initial documents. You sign those. After they're signed, that's when we lock your rate. So you want to sign those as quick as possible because we never know what rates are going to be the following day.
Right.
And
Or that afternoon.
Or that afternoon. So rates can change multiple times in a day. I think yesterday we had 2 reprices. So those things can change. After we get everything locked in, though, we get you over to our process team. And most people that love what we do at Pure Funding, it's because of our processors. They are on top of it. They're finding documents that, if the underwriter starts requesting a bunch of documents and 5 of them they don't have to ask you for, they're looking for those that they don't have to ask you for and getting them, so that they're only asking you for the things that they need. So it's not a lot of back and forth. They're really good at answering questions. They know that one type of document can substitute for another type of document, which I don't know. So you don't want to ask me those questions, but they know, and they make the process very smooth.
Right.
That process is going to be the lion's share of your loan process, because basically there is a third-party underwriter that is sitting over here that is looking at all your documents. They're not allowed to talk to you, so that they can remain impartial. And they're just looking at the numbers, and they're going to make sure that it works or it doesn't work. And if it doesn't, they're coming back to us, and we're figuring out how to move the loan forward. And if debt needs to be paid off, if the rate needs to be bought down, if the you need to put more money down, whatever that lever is that we need to pull to be able to get you pre-approved, or to get you finally approved and cleared to close, is what we're doing through that process. And then at the end, you get your documents, and that part's pretty simple. And you get your final documents. You know what you're going to be paying at closing, days before closing, and so that you can get those funds together and transfer them wherever you need to. Absolutely. And then you go to the closing table. That's the fun day, when the keys are in your hand.
Keys are in your hand.
Yeah,
absolutely. Well, if there's any questions on the process, we always say reach out. We're happy to have a consultation with anybody, talk about the loan process, see where you can get pre-approved. Also, any questions you might have, just drop them in the comments below. Follow us on Instagram, TikTok, Facebook, YouTube. We're always here to help. Give us a shout. And until next time, talk to you later.
Bye.